Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's keep up with the euro currency. So now we have to prepare the trading plan for the coming week, what we intend to do. As usual in today's weekly report we have taken a look at the sentiment on the market, perspective of the longer term situation that we have, and overall situation that looks not really positive to the euro currency. As actually we could say about the dollar arrival. So the gold market and cable and as well. So the current analysis of the statements that were made by the Fed officials and by the analysis of the big companies tells that inflation in general takes the back seat currently. It becomes not as important indicator as other indicators because actually inflation already has hit the Fed target. So we have the 2.5% of the forward inflation rate 5 years for 5 years, and in general nearest inflation the recent inflation statistics shows the very strong numbers. So all of them stands in excess of the 2%. And this, as you remember, the two conditions were from the Fed that justify the rate change, and one of them was inflation. Inflation currently hits the target. And it stopped to be the dominant factor for Fed policy, to determine the Fed policy. It is achieved. That's why interest of the investors gradually is turning to the employment, because currently employment number stands still 7.5 million below the pre-pandemic level, and that what investors will keep an eye on. For instance, if we suggest an average 300,000, 400,000. Jobs will be created. To close this gap, market needs approximately 20 months. So this in general agrees with the Fed term of the 18 months till the first rate change. If it will be faster acceleration in employment, that will more pressure on the Fed, and this anticipation of the rate change could start pressing on the markets faster and sooner. So here we have some concern about long-term targets that we have discussed in the report. So personally, I feel not quite comfortable that the major monthly target on the dollar index has not been achieved. The situation looks so that dollar could reverse earlier. In general, sometimes it happens, but in the first stage of the reversal, this is very uncomfortable factor because every time you are waiting for some sudden collapse in the market could show the opposite spike to complete the target. Especially this happens very often in the gold market. But maybe something will happen that will let market complete this target. I do not know. It's difficult to say. At least technically, euro currency still has chances to do this if it will be able to stay above the major support areas of 117, 116 area. In this case, chance of some rebound changing of the tendency still exists. What the factors could trigger this the dynamic of the market, I do not know. But this is a bit longer term questions. So if you would like to, and you're interested with this, you could read the report. Speaking on the short-term situation and the trading plan for the coming week, first of all on the daily chart. Performance on the daily chart stands very weak, so it doesn't correspond to any bullish market any bullish pattern that we theoretically have here. For instance, if we consider the hand and shoulders, this is not the type of action that you expect to see on the bottom of the right arm, where the bulls should start to control the market. This is the first one. You consider any minor rally as selling off by the investors. So the spikes on the daily candles that you could see. So overall upward pullback here, it seems that it stands due to oversold, not just because the new traders are stepping, so we do not see any purchasing behind the current price behavior. This is short-term speculative action that just triggers very small performance, very short-term pullback. It seems that on the background of this situation, we have to start preparation for taking the short position. Because, as you know, this pullback was temporal, and we said this is only for scalp trading on intraday charts. Our major daily view is that we should get some downside action, downside continuation from some predefined resistance area, and where we'll be preparing to take in the short position here. Initially, we thought that will be 120, 120.25 area. That would be perfect, but it seems market is not able to reach it, even near a standing level. That's why on the daily, we mostly will be watching for MACD predictor and whether we will get the grabber. As soon as we will get the grabber here, that will be the pattern that could give us the signal that it's time to sell. Because in this case, market should drop below this area. Currently, market is not at oversold, as you can see, and it easily could drop back to the 117. Our target stands approximately 1620. It's a large ABC level. So that's approximately what we intend to do on the daily. On the 4-hour time frame chart, I also do not see something really special. Here the situation is a bit tricky. So from the one point of view, you have the reversal bar. But from the another point of view, minor grabber has been formed. Personally, guys, I am not believe too much in this grabber, just because it has been formed in the last hour of the trading session. And its appearing could be just because of market has no time to proceed in time further. This price action just week has been closed, and it was closed right in the moment the market stands right here. So that could be just an occasion and the product of the closing process in the market, because this is intraday grabber. Still, if we still will get lucky, market indeed will work with this grabber and market will jump up above this top, then it will be perfect situation, because we will get price around predefined confluence resistance, and we could get the grabber around on the daily chart. That will be just perfect. But again, I'm not sure. I'm more rely on this reversal bar, because it shows just the third failure attempt to challenge this resistance. Market for the third time wasn't able to pass through the 1960. So it was first, second, and third. This reversal candle has been formed. It suggests more for a downward action. On the hourly chart, you could see a few moments. First of all, our divergence has been completed here, just because market has created a new top. This is the minimum target of the divergence, so currently I could delete it and do not need it anymore. And another strong bearish moment that I see here is with this downside action. So that was reaction on the stable inflation statistics on Friday. It was the same level as in May, but market still showed this reaction, but these levels are really high. So that just confirms that inflation stands solid currently. But from the technical point of view, this is very bad sign, because take a look here, we were considering the butterfly, if you remember. And market was not even able to reach even the minor 127 extension. So it was the breaking of the pattern in the middle of the performance, somewhere around halfway to the target. It was, you could see drastic change of the sentiments. It was good upward performance that we suggested, and immediately it has been broken. So this is very bearish. That's why I'm not believe too much in the grabber that we've got here, and I'm personally focused more on the possible downward continuation. I don't know how we will get the grabber on daily, we will see. But in general, this performance stands bearish. So, as a bottom line, so we know in general overall setup, we know that we should take the short position stops, probably has to be somewhere above 20-25 confluence resistance, above this area. Perfectly, if we will get the daily grabber, it also will be formed somewhere in this level. That's in general what we have. But the problem is where to sell, because unfortunately here, as you can see, we do not have any clear bearish pattern or setup that could justify the taking position. That's why we will have to invent something to deal with the current situation. Most conservative approach and safest way is to do nothing and wait for a reaching of the XOP here. If this will happen and market indeed will jump to the XOP, that will be perfect moment to take the position, because we will be at agreement resistance and probably the daily grabber already will be formed at this moment. But I'm not sure this definitely will happen. That's why the more acceptable situation here, more acceptable way to do some compromise is to take the halfway position, for instance, right here. If we will get the upward action, then we add more to this second half to your position right here with the same stop above for our confluence. If somehow market will collapse down, start dropping, and we will not get any grabbers and nothing, well, at least you will be in the market already. You could move stops to break even in this case. And then sitting and searching chance to add more some minor pullback in the case of downside acceleration. So that's something that you need to make decision on. So that's up to you. This is home task, and you need to make the decision how you intend to take the position if you in general would like to sell. How you will do this, that's very personal and mostly depends on personality and mental mentality of the particular trader. So that's as you feel comfortable more. So more conservative traders will watch for a conservative approach. Others could use this compromised decision for position taking. So that's actually what we intend to do on Euro currency next week.